You're making money, but every month it seems like it's slipping through cracks you can't see. That's not a revenue problem, that's a profit leak. After personally analyzing over 100 service businesses, I've found that the average owner is actually leaking at least 20% of their profit without even realizing it. I'm Abby Johnson, certified Profit First professional, and in this video, I'm going to show you the 5 hidden leaks draining your business and how to plug them fast. All right, so the first profit leak is that most business owners are operating on a broken formula. So what do I mean by that? Let's first talk about what is profit. Profit sounds like a general word, but profit is actually going or supposed to go towards certain things. So profit should include owner's compensation. So this is your compensation for actually working in the business. If you were just a silent investor, out of the day-to-day completely, then you wouldn't really have this. But when we're talking about profit, we're also talking about your consistent pay as an employee, technically, of the business. Profit also includes taxes because unfortunately, you get taxed on the profit. So your business should be able to pay for the taxes that you are accruing. And then you should also have profit that's able to be distributed. So this is if you were distributing to silent investors, owners out of the day-to-day, and then you as the owner, even if you're already getting an owner's compensation, a salary, you should be getting distributions as well as like a bonus for you as the owner. Your risk, your time, everything you've put into having this business, you deserve to have distributions. So all of these 3 things account for profit. And a lot of business owners forget about that. And what happens is we're all operating off of the same generally accepted accounting principles. Literally, it's called GAAP if you want to get nerdy about it. And really what that formula is revenue minus expenses equals profit. So profit is coming last in this equation. So you're running your business, the money is piling up, it's all going out and being spent, and then at the end of the day, there isn't really anything left for profit. This is how I find people in situations where they can barely pay themselves an owner's compensation, or they're able to take owner's comp, but they can't pay their big tax bill. And distributions, a lot of business owners I work with aren't even taking distributions. So profit is leaking just by going based off of this general principle that most everyone operates on. So let's look at flipping the script on this formula. So if we use the profit first formula, what we do is we take revenue minus profit equals expenses. So this means we're setting aside right away to cover these factors of profit, and then we're running the business with what's left over. Now, this doesn't mean don't pay your bills, don't pay your staff, pay yourself and not your staff or anything like that, because honestly, that's what I thought when I first heard this formula. I was like, well, that sounds sketchy. The idea is that you're setting aside to cover these profit categories, but then you're being innovative with your other spending. So yes, you have to pay payroll, but maybe you actually look at the subscriptions you're paying for. You actually start shopping around your insurance more than you were before. You start really paying attention to what you're spending. And just by flipping this formula around, it really changes the way you spend money, and you're going to save money from day one. That leads me to our next profit leak, which is cash flow management. So most people, even if you just took that formula and went and applied it now, if you don't apply it properly and actually manage the cash properly, you're not going to reap the full benefits of it. So what we need to actually put this into practice is a series of bank accounts. So what happens when someone is using one bank account for all of their income and all of their expenses is it's very unclear what you can actually spend. So let's say this is a bucket. You have one bucket for your money and you have 50 grand in that bucket. And then throughout the week, you get another 50 grand of income. So this is 50, this is 50, so you've got a total of 100K. So you're like, wow, I've got 100K. I can go make that new hire. I can go buy the new truck I was wanting to buy, whatever it is that's on your mind. But then by the time you spend all that money, your account might look more like this, and you might only have 10K, but you forgot about paying yourself, planning for your quarterly tax bill that's almost due, and making sure that you actually can distribute to yourself or reinvest for growth in some other way. So it can be very confusing when all of the money is going in and out of one place. I once had a client I was working with, and she didn't want to implement the accounts that I'm about to talk about because she thought it would be too confusing, which is fine. I never force anyone to implement this if they don't want to. We were also working on growth strategies together, and that was going great. But what would end up happening is she was the breadwinner for her family, and her personal finances were a wreck. She was overdrawing on her account. Even though her business had money in it, she never knew how much she needed to be taking home. So we finally implemented these accounts, and then she was able to see what she needed to bring home, what she could bring home, and we got her on a consistent payment schedule for herself so that her personal finances were secure and this problem wasn't hanging over her head when she should be treating patients and thinking about these financial problems. So now her focus was able to be completely on her patients because she knew her cash management was organized and solved. So let's look at these accounts I'm talking about. So instead of this one bank account system, we actually want to have 5 accounts. So the first account, the first bucket is income. So all of the money goes into this bucket. And let's use the previous example and say $50K came into that bucket. So you pick a set allocation rhythm that works for you, and then you're going to allocate to the following buckets. The first bucket is one specifically called profit. So this is a bank account setting aside for profit. And what that means is at the end of every quarter, you as the owner can take half of this account as a distribution. This is your bonus. This is what you do to reward yourself. Go do something fun. Go put it, I've had people put it into expanding their homes, buying a new home, buying a boat. I have clients who give a portion back to their employees as a profit share. But the idea here is you get a reward and the business is building a reserve at the same time. So let's say you have this $50K in your income account, and we're going to put 10% aside into profit. So now the profit account has $5K. The next bucket is the owner's compensation account. So for this revenue of business, we would also want to put 10% aside for owner's compensation. So we've got another $5K in owner's compensation. Then we have a tax account or a tax bucket, and 15% needs to go in that bucket. So now we've got $7,500 in this account. And then finally, the last account we allocate to per that first formula I talked about is the OPEX account. We want to see this account at about 65% for businesses doing over $1 million in revenue. So we put 65% in operating expenses, and that's $32,500. All right, my proportions are not completely perfect here, but now you can see when we look at these buckets, we see a clearer picture of what can actually be spent. So this money is set aside in different accounts, and we only have $32,500 to spend for the week. We know that payroll is $20K, so that means we actually only have $12K to spend. All of our other bills add up to another $10K, so that's $30K accounted for. So now we really only have $2,500 to spare. So you can see this is a very clear way to manage your finances and gives you a clearer picture on what you can actually afford and making sure that all your bases are covered. And look at the difference between this versus this account where you thought you had $100K to spend. That looks very different than this operating expense bucket, right? So this is a really easy way to tighten up spending because it makes it very clear where you can spend money and where you can't. Again, you instantly save money when you start managing your money this way, and that means more profit. You're immediately putting profit in a profit account. You're immediately setting aside for taxes, which a lot of you aren't, I know that. And then you're already getting your owner's comp covered. So this really is the fastest way to make more profit today. If this is hitting home and your revenue is up, but your bank account isn't, it's time to fix it. My team will find your top profit leaks in one of our free profit assessment calls. Most owners find 20 to 100K in hidden profit on these calls. So click the link below, book your call today, and stop losing money. All right, so profit leak number 3 is the scope creep. So the scope is what you have agreed to do, the list of services that you have agreed to deliver. And what happens is a lot of business owners think that just adding things in here and there is good customer service. And sometimes it is. But what happens either through trying to overcompensate and make a customer happy, or out of desperation and needing the sale, needing the close, business owners, or sometimes the culprit is the sales team, will sell things that the team is not actually ready to deliver. I would rather have my service be the best and have the best value behind it than trying to add things in here or there to make up for an inferior service. Because when you add things in that weren't supposed to be there, your team isn't used to, you don't have a set system for, you're wasting time and resources. So what you need to be doing is documenting, billing everything you're doing if you are in a billing type model, and charging for everything you're doing, but just make sure that is of quality, the value is behind that price. I've seen this a lot with marketing agencies where out of desperation, they're selling services just because they know the person is going to say yes. And then it gets over to their delivery team. Their delivery team is like, what? We don't do this many blogs a month. We don't do SEO like this. We don't do ads on this platform. And then you are now wasting your team's time scrambling, trying to deliver something that you aren't actually set up to deliver. So just stick to what you're good at, make it as efficient and valuable as possible. Then you can charge the best price, the most profitable price, while also getting great results for your customers. This leads into profit leak number 4, which maybe should be number 1, because a lot of business owners have the misconception that busy team members mean productive team members. I see this a lot when I'm looking at the finances and looking at how much someone is paying in payroll, and it's usually above the threshold of what I want to see. And you could say, well, they're just not priced high enough, but most of the time it's actually because their team is not as efficient or productive as they could be. So this could be due to inefficient systems, as I just talked about, or this could be inefficient employees. For example, I have a client who is a large engine mechanic, and when I dug into his numbers and was really pulling the string on what was going on and why he wasn't profitable, he had very high revenue. He finally admitted that he wasn't billing certain hours. And I got on him and I said, why? Like, you need to bill the hours. And it was because he knew that his techs were taking too long or making a mistake or something like that. So he didn't feel right billing the client for that. So this is definitely a waste of time for him. His techs are taking too long and they are working hours that he in turn can't bill because they're not doing a good job. So the way to catch this is to make sure every team member has some sort of metric that's being monitored. This isn't to turn your employees into numbers, but it's to factually see what they are producing. I had a client who was pushing back on me with this, and they said, we can't quantify it, we can't quantify it, but we feel like they're not doing enough. And the thing is if you can't quantify it, you can't monitor it. What gets measured matters. That's what people will focus on. So you need to have statistics that actually monitor what people are doing, if they're doing their jobs, if they have more capacity, if they need help. And if you have a more efficient team, you can have more efficient profit. It's going to take them less time to deliver, less time to do things. You can bill more hours, etc. And that is how you're going to get more profit back into your pocket. All right, the final profit leak is not having the proper systems in place. Now, I know I talked about that a little bit, but I'm talking specifically your administrative processes. A lot of business owners don't focus on this because they don't think it directly relates to making money. It has lesser importance put on it because of that. But these administrative processes do lead to money. They lead to inefficiencies if you don't have them in. But if you do have them in, that's where the big dollars are at. Having poor systems can lead to things like missed invoices, missed leads, missed opportunities. So you really need to be on top of this. IDC research actually showed that having sloppy processes was losing business owners 20 to 30% of their revenue annually. I had a client recently and she was the one doing all of the billing because it was rather technical. And again, when I dug in, started asking questions, I said, "Why is your revenue so down the last few months?" And she said, "Oh, it's just because I'm behind on billing." And I said, "What?" That's literally the number one thing you need to do to bring money in the door, is to make sure you're on top of your billing. And I hear this a lot from business owners because sometimes they're the ones doing it. So what we did was I broke down her process with her. Okay, what are the exact steps you have to do in billing? Let's see how we can make it take less time and get in a routine so that you are on top of your billing and you don't fall behind again. So we were able to break down her process into a few steps. We even delegated one of the steps to someone else. Now she's gotten caught up on her billing. She had great cash collection months. And now she has a repeatable process she has implemented, and this is going to help her stay on top of her billing and make sure that she has cash coming in the door consistently. Look, after working with service businesses from 100K to 30 million, I have found one thing to be true, and that is profit doesn't just vanish. It leaks through gaps that can be fixed. Once you see them, you can't unsee them. But once you fix them, profit finally starts showing up automatically. If you want to find out how much profit your business is leaking right now, click the first link below and book your free profit assessment. We'll pinpoint your biggest leaks and show you how to plug them fast. And when you're ready to make sure your profit never disappears, check out this video where I break down the 5-account system all of my clients use to protect every dollar they earn. I'll see you in the next video.